These charts scare me. Today I'm going to show you 3 charts that scare the crap out of me. And I'm going to give the latest and greatest information on each chart and what's happening, including this bear flag forming right now. Because as you know, we covered this bear flag right here on this channel. And it broke down and we projected a downfall that nobody wanted to believe all the way as low as below 19,000, which it ended up being even a little bit lower. The only problem is when we got down here and we formed our bottom, we started to form yet another bear flag. Is this going to plummet us in prices deep below 10,000, or are we going to avoid it? That and more in today's video. If you're new here, my name is Steve. I started in the stock market a little over 20 years ago. I thought I was going to be a big, successful trader and make a lot of money, and I got destroyed. I lost a lot of money with a lot of really silly mistakes. And over the next 20 years, I learned how to dominate this game. And I'm here with you so you don't have to make all the painful and silly and absurdly expensive mistakes that I did. Hit that subscribe button right now. So there's 3 charts I'm going to show you. I'm going to show you this one. We're also going to show this one, and we're going to show this one. There's some new developments on all 3 charts, and we'll start right here with this one. At the end of the video, I'm going to give my honest take, because if you watch our videos, we called for the bottom to be in a little over a month ago when we hit 17,500. There were a lot of facts in the charts that were screaming the bottom was in. Nobody wanted to believe us. The high majority of people at the time, almost 80% of the people, said that we were going a lot lower. This could be something that could cause us to go a lot lower. And the question is, am I going to change my stance? Do we still believe the bottom is in, or are these charts that scare me so powerful that it's going to change my opinion? Because as a disciplined investor, when you see something playing out in the charts, like, hey, the bottom is in, you have to be open to the other side. When there's new facts that come in, you've got to be able to unemotionally change your decision based on the facts, not your emotion. And that's what we're going to decipher today. So we talked about this bear flag, right? What is a bear flag? A bear flag is when you have this resistance area that's rising, right? You had a high, a higher high, a higher high. So the resistance is rising and the support is rising, meaning you had a low, a higher low, a higher low, a higher low. Most people see a rising channel and they're like, bullish. We're going higher, higher highs and higher lows, bullish. No. In a downfall like we had, this is where things start to get interesting, right? We called for the mega crash to start happening at 48K. A lot of people didn't want us to talk about that. They didn't want to hear that. And we actually broke through this channel here, this bear flag. This was our breakout candle, this was our confirmation candle, and then we plummeted down to right around the price we should have. The problem is now we're in another one. This is another bear flag. You can see the resistance area here. We tried to break above it here on July 16th and the candle on July 20th, okay? We're in this area here where it's getting very, very interesting. Now you may say, hey, these candles, did they null and void this bear flag? No, they did not. How to null and void this bear flag, right? What can we do to make so this bear flag is not applicable anymore? The only thing we can do is we need to confirm one candle as a breakout candle above, and then we need a confirmation candle closing as support above this yellow line. And that's how to get rid of this as a concern. We have not done that yet, and we're not close yet. As we speak, you can see we're holding beautiful resistance. We had this wick on July 28th. We had a wick come all the way up here, right, to almost 24,600. But again, we didn't close above here. We're still in this zone, right, going from the bottom to the top to the bottom to the top. And the bottom of this zone is at about 20.8K. If you wake up in the next week or two and you see a candle close below 20K, we're in deep trouble, because again, this bear flag, just measuring the pole, took us from this 48K area down to below 19. That was our measured move. This is our new pole. You see this pole here? This is our new pole. And I'm not going to do it because it'll freak everybody out. But if you take this pole and attach it to a potential breakdown here, it goes real low. And some people may be shaking their head like, yeah, I've been calling for below 10K for a long time, and maybe that's music to your ears. But my point of this video is, do I think it's going to happen? And if so, will it change my mind that the bottom is in? But before we get to that, I need to show you 2 more charts. I need to show you this one and this one, because we've got some new developments, right? This was another chart that's quite scary. It's a bona fide fact. This is a bearish engulfing candle. And for those of you that are relatively new, what is a bearish engulfing candle? You need a red candle to print with a big old body, and the previous candle has to be green with a smaller body. This big red body has to be bigger than the previous green body. It's that simple. If it is, that's a bearish engulfing. This happened to be Bitcoin's first ever bearish engulfing candle of its history. You can look at the other red candles that we had. They were not bigger than the previous green body. Okay, you can see that this was not bigger than this one was not bigger than this one was not bigger than this one. This is the first ever. And a bearish engulfing candle basically says trend reversal. What trend? The trend that we had from 3,700 up to 69. It says that that trend is over and that there's a big trend reversal to the downside. It says that this candle will affect the next 2 candles, generally speaking. So if this affects the next 2, we're on the 6-month chart. That's saying that's going to affect the next year. So is that going to play out? What will happen? Now we do have a false signal, right? This is a bullish engulfing candle, right? We had our first one here, bullish engulfing candle. It's the complete opposite. You need a big old green body, and it needs to be bigger than the previous red body. Then it qualifies as a bullish engulfing candle, and it says trend reversal to the upside, which, by all accounts, we had in a major way. Now, there are false signals like this one, so we need to pay attention to here, and this is something that's going to play out over the next year. In the more short term, this is a chart that also scares me. Here, we have 99% of the price action happens between this top yellow line and the bottom yellow line. And usually, in a bear market, we hug the bottom of this yellow line. We did it all the way back in 2011 and 2012. We did it all through 2015, 2016, and we also did it through 2018 through 2020. We hugged this beautiful yellow line until recently. We closed below this yellow line. We've never done that before. Again, 99% of price action happened between these yellow lines. Every bear market we've ever had held beautiful support until this one. So what happened? Well, what happened was that after this 20K top, we had an A, B, C correction, which took a while to play out. And through that, we didn't build a strong enough base on our way down, right? It was a short-lived base here and a short-lived base here, and we didn't have enough market structure to have a genuine, true top, right? We ended up having a double top, short-lived, and then we subsequently fell where we should have, but we should have fallen from here, which would have brought us to here, but we fell from here, which brought us below. So here we are today, holding resistance to what was our strong support for about 12 years. That's a major concern. What you don't want to see is repeatedly be rejected by this level. But what I believe is going to happen, we'll get to in a moment. I have a theory about this chart and what I think is going to happen, but you can see also down below the RSI. The RSI is holding resistance from this level that was our support for all of these years as well. Okay, anytime we usually come down to this white level, that's when the bottom is in. You can see the bottom was in here and the bottom was in here. So I'm going to give my opinion on this. We'll do it now, and then we'll do my opinion on this chart and this chart as well. So what do I think is going to happen here? Well, here, what we can't see is repeatedly be rejected from this. What used to be our support is now our resistance. If that's the case, it's going to push us down. What I believe is going to happen is over the course of this bear market, over the course of the next handful of months, we should come up and test this a few times. And it should be our resistance for a few more candles, okay? And we could hug this line, right? In a few months from now, this line is at 46,000 in November. We might get up to there, but it's not likely we'll get above there until the bull market is ready to start. And we have our strategy for that as well. And if you haven't figured that out, make sure you subscribe to our channel. We cover all of the biggest moves in crypto. But for this chart, it's concerning, but it's not deadly yet. We're not showing signs of major rejection. Now, when we go to this chart, it's a little bit of a different story. We're inside of this pattern that could be devastating. Where am I? Do I still believe that the bottom is in, or am I going to change my opinion? Right now, I still believe the bottom is in. We called for the bottom to be in back here in the middle of June when everybody said we're going substantially lower. 80% of the audience on every channel said we were going a lot lower. Now people are starting to come around to the idea that the bottom is in, but then we have things like this that throw a wrench into it. Now, has this changed my opinion that the bottom is in? No, simply because we're still in this pattern. We haven't broken down. Now, if we get a candle closing below $20,000 with the body of the candle, we could be in for some very large trouble, and we'll have to look at the facts at that point if that happens. And we may have to change our opinion based on the facts in the chart. But right now, by my estimation, the bottom is still in. Just like we said, whatever it is, 5-6 weeks ago, it's still in. We need to close above this. We cannot close below this. Now with the bearish engulfing candle, again, it's going to take 6 to 12 months for this to really play out, for us to really have enough facts in the charts to make a sound decision here. But one fact we can't argue, this is a bearish engulfing candle. Bearish engulfing candles by definition represent a very steep and downward spiral. More to come on that. But where we stand right now, these charts are scary. I wanted to give my latest information on them, but we don't have strong enough information to change our mind that the bottom is in. More to come. Hit that subscribe button. We'll see you right back here on the next video. Peace and love to the fellow underdogs. There's only one question left: when to sell your cryptocurrency. Click right here, right now to find the 3 simple steps.